My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate, to teach you. Call me, 1-800-743-CBC. Tweet me, Jim Cramer. Tomorrow at this time, if things really go awry, we may have a new champion, a new largest stock in the world, and its name is SpaceX. I know it's supposed to be valued at $1.75 trillion because that's what Elon Musk seems to want it to be worth. But that's just the IPO price. The opening price, the closing price, and everything in between are out of his hands. Instead, they're in the hands of the syndicate desk and the public. And believe me, these are lions Musk can't tame. Now, we had a buoyant session today. Dow gaining a beautiful 930 points. S&P climbing 1.75%. NASDAQ jumping 2.54%. Ostensibly because the president first ramped up and then dialed back the hype for an attempted attack on Iran's most important port. But there was something else at work today, too, behind the scenes. Today was the day you found out your allocation for SpaceX, and you could see the market starting to levitate early on as we began to hear that the deal was tight as a drum. When you think about IPOs, consider them in the context of Goldilocks and the Three Bears. You don't want the deal too cold because then it blows up in your face. You don't want it too hot where you have meaningless gunners in there. We'll send the stock to the stratosphere, then flip it at the opening. You want it to be just right. Now, what's just right? Where the stock is a little bit above where deal price. If it's 135, you want the stock to go to about 140, maybe 142. Meanders higher. Perfect. No runaway freight train. But aside from too hot, too cold, and just right, you know what? There is a little-known fourth bear. Not in the story. So hot, this bear, it burns your face off. This is a scenario where SpaceX goes to totally insane levels, possibly to the point where its market capitalization rivals, if not passes, NVIDIA's, the company that's the largest in the world, $4.9 trillion valuation. How can it get that high? Let me give you the sequence. First, we're told that large institutions got a lot of stock, but informally pledged to buy more in the open market. That's when they put in for 1 million shares at the deal price. Then they get allocated 500,000 shares, and with a wink and a nod, under the assumption that they'll buy another 500,000 in the open market. I think many money managers got that call, okay? Informally, they were most likely told not to sell unless the stock goes so high that the syndicate desk will release you from that no-sale pledge. Then there are the people known as retail, the home gamers like you who love Elon Musk and can't believe they're going to get in on the ground floor. A little more than 20% of the stock was allocated to retail. These buyers who got anointed they got some stock from E-Trade, Robinhood. They can be controlled because they're obeying a disciplined sales desk operator who gave them the stock. That operator can check your account to see if you sold the stock that you pledged you wouldn't. And if you sell, you're not going to get any more Anthropic or OpenAI. Then there's the wild cards, the people who've never bought a stock before or are using a discount operator who's not part of the syndicate. These are new unguided missiles. They cannot be controlled. They're big in number and they're very unsophisticated, so they'll most likely use market orders because they don't know there's an alternative. They may only be after, say, 50 shares, but that adds up. And when there are a lot of buyers, holy cow, a lot of 50s can be very big. Now, the people controlling the books, running the deal, both Goldman Sachs for big accounts and Morgan Stanley for retail, will want to ensure that this IPO doesn't cause a giant blowout. A double would be a resounding defeat for them, not to mention a real loss for Musk, because, of course, he would have left a lot of money on the table. It does get worse. Just a few days later, the stock gets admitted to a bunch of indices, including the NASDAQ 100. That means a ton of forced buying from index funds, potentially sending SpaceX still higher. Now, what should happen? All right, the syndicate desks who really run the show should tell brokers that they don't need to stoke demand if there turns out to be a lot of money coming in for the transom. Their clients don't even have to keep the stock or buy more if they don't want to. They're allowed to take profits. That's one thing that you say. This kind of talk isn't usual, and I fear the syndicate desks don't even know how to do it. The larger accounts who pledged to buy another 500,000 shares in the open market, they should be released or discouraged from doing so. They can sell their stock. Because of the voluminous amount of stock coming over the transom to buy, the sitting desk maybe have a hard time to find sellers. If they don't, an unprofitable company could end up being the biggest stock on earth. That's a mistake, but it can't be changed because neither Goldman nor Morgan Stanley can change it. What happens then if it goes too high is something we saw with Figma and Cerebras. For a couple of days, they continued to go higher, and then they started the long descent down that could have been prevented if their syndicate desk hadn't lost control of their stocks. We want the deals to be under control because otherwise they can be disastrous like those two I just mentioned. I know from personal experience, during the dot-com boom, I brought a company public, and it went from $19 opening price to $62 where it actually opened and $2 in a heartbeat. 1916, too. The pain never really ended.
The House of Pain.
Because I sold none myself. It was a very simple problem. The IPO was priced at 19, but there were so many fans of the street.com that they used market orders to buy hundreds of thousands of shares, moving the stock up to unsustainable levels. These buy orders were all batched by a now-defunct broker, and when they came up with an average in the 60s for the buy orders, I don't know, don't ask me how they got it. The official investigation never got that far, but it was clearly unsustainable, and I said so publicly at the time. That wouldn't have mattered if it weren't for the fact that the broker who batched the stock together had no sellers in hand. So what happened? He shorted the stock. He shorted 63. Then the broker, again, not the syndicate, didn't work with the company, which would have been me. He worked the stock all the way down and made $1 bazillion being short the street.com from the day it came public. And that's the risk here, that some villain appears and tries to wrest control of the opening from Goldman and Morgan Stanley and manages to open the stock at $4 to $5 trillion valuation too high, then starts walking it down and makes $1 bazillion. Can a $4 to $5 trillion stock really be at hand? For a few minutes, perhaps, just as long as it takes to gaff a marlin. The bottom line, gaffing, that's a terrific catch. But if it isn't stuffed and mounted fast, guess what? It ends up stinking to high heaven. Let's go to Mike in New York. Mike.
Hi, Jim. Thanks for having me back.
Oh, Mike, it's a pleasure. What's going on?
Nothing much. Several years ago, I mentioned to you Carvana. And about a year afterwards, Carvana ran 2,000%. I don't know if you remember that. But last time I was on, actually, we talked about
Carvana was a great buy for us. Great buy that we got. Garcia did a good job for us. Go ahead. I'm sorry.
No, it's okay. Last time I was on, we actually talked about the government shutdown scene. We talked about Hertz and Avis. Hertz doubled, and Avis, well, it ran 600%. Yeah. Well, now I want to talk to you about Krispy Kreme, symbol DNUT. Kash Patel and Congressman Moore have bought shares. And also recently, a director has bought 1.5 million shares. There's social buzz going around that Berkshire Hathaway could possibly buy them out. Berkshire Hathaway bought Dairy Queen in 1997 for $600 million.
Right.
Both these companies...
Yeah, look, I'm going to interrupt you there, and you're a nice fellow, but I don't want people to think that we can bet on Berkshire Hathaway buying, because then that sounds like that I've endorsed that too, and I can't do that. There is insider buying. The company does seem to be worth more than it's selling for. I don't know how it got that low with the insider buying, so I think they're onto something. But we're not going to speculate on who's going to buy what on this show, because we have honor. All right, look, there's a real risk that SpaceX blows past its opening price tomorrow, and you need to stay cautious in case that happens. Now, on Mad Money tonight, Honeywell is closing in on the spinoff of its aerospace business, and I'm sitting down with the CEO fresh off their investor day to learn more. Then I'm running through the strongest part of SpaceX's business to tell you if the stock could be a buy, depending on its debut. And later, I'll go off the charts to see how the major averages are holding up with all the volatility we've seen recently. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.